Hey everybody, welcome back to Marketed Sectors. My name is Mike Fairborn. Good to be with you all today. I'm joined in the chat by a good friend and colleague of mine, Connie Hill. Welcome to each of you as well. We've got Vic, Ken Mayfield, Robert Boucher, Jay Richardson, Ray Leminski, Life of the Fast Lane. Great to have you all on board with us, folks. Today, I want to talk really about volatility contraction in a couple of different key market industries. I want to look at a specific indicator that would help us to track that. We'll kind of bridge that together. But a lot of times when we see contraction within volatility, you might get a break higher or lower outside of a range. And it can be an interesting aspect for us to consider here as we're kind of narrowing down. We look at markets here, but we also look at sectors and industries as well. So with that, I look forward to it very much. Let's go ahead and dive into our discussion to get going. Start off with some disclosures here. Information here is provided for general information purposes only, should not be considered an individualized recommendation or personalized investment advice. Now, Schwab does not recommend the use of technical analysis as sole means of investment research. Paper money software application is for education purposes only. Investing does involve risks, including for some products more than your initial investment. Couple quick notes here as it does relate to futures and futures options trading. There's substantial risk that's not suitable. Futures and futures options trading involves substantial risk. It's not suitable for all investors. Please read the risk disclosure statement for futures and futures options listed there. Some additional details on Charles Schwab futures and Forex listed below as well. Okay, some final points here. Past performance is no guarantee of future results. And yeah, that's our final slide. So let's go ahead and dive on in and look at the markets here. I've got the S&P 500 up right now. Just some quick notes on that before we dive into some of the volatility that I was mentioning to you. Getting a sense of that. We looked at it actually a couple of weeks ago in terms of the ATR. Past couple of weeks, we looked at the ATR, the average true range as well, for signs, for indications as to what we might see on the market itself. But looking at the market as it stands right now, fairly steady in terms of price action to the upside. We can see this right over here. In fact, this is a high. Obviously, it's an all-time high. And we did see a moderate change in price behavior over this period of time. In fact, let's just clean that off. We'll start over here, and I'll just highlight this. So we did get that high, and technically this is a higher low. But within that higher low, what are we getting? We're getting a little bit of a sideways consolidation. That's sort of that deep seek gap, that Chinese AI that was released right there. The markets did come back up, and when you close a gap, if you read any like some of the sort of historical technical analysis books and manuals, when you close the gap, a lot of times that's when markets can also fall again. And it could be on the upside or the downside, depending upon where the gap is at. We closed that gap and we dipped again. Now we're coming back up again. And by the way, this gap that was right in here, we closed that gap. But the interesting thing is we're actually holding that gap as of right now today. I have to say that because things are pretty fluid in the market right now. A lot of volatility, a lot of questions and concerns around tariffs and how the market might respond to tariffs. You just got to keep in mind with those tariffs, it's a form of negotiation. Of course, the market does bear the brunt of that in terms of volatility, but clearly we can see kind of a pattern of negotiation with tariff announcements, okay, to get certain countries to do certain things that they might not have been doing before. So putting it in context is difficult when markets are gapping, no doubt about it, but big picture, it is a negotiation tactic. I think generally speaking, just park that in the back of your mind. It doesn't mean that we won't get additional volatility. In fact, we probably will get more. But those gaps, they have accounted for some weakness in general price action and closing prices. In fact, if we look at the RSI right down below here, you can see that we are getting a negative divergence on the RSI right now. Negative divergence being right here. We did make a new high in the market. Price-wise, prices made a high. The problem came when the RSI did not make a new high. I believe we saw the exact same thing there too. Let's do a couple. I want to do a couple more because it's always interesting to look at multiple levels of divergence. In fact, that's one thing I've really kind of looked at quite a bit, just using separate indicators to give us a different, kind of a similar look. Is it diverging or not? But with completely different math behind those indicators, giving us a sense of, could it be diverging or not? Here's a good look at the MACD2 line. So this is just the convergence and divergence of the 12 and 26 exponential moving averages right there, right? How are they doing? Moving ahead and falling behind. Take a look at the high point here. The high point down below, you can see, yeah, pretty clearly that there is a negative divergence there as well. And what I mean by that, when we look at indicators, we're just not getting a high above the range. And so still looking at this right now, I think this is going to be an interesting concept to consider as we look at markets that have extended for a while. You know, prices are making a new high, but are we getting strength of buyers behind it? One last one I want to take a look at, but we're going to have to flip to the ES to do so. So it's just we're not going to be placing trades or anything on the ES of futures, just to examine the futures contract itself. We can look over here and we're going to see something very, very similar. What I wanted to show you though was the money flow. RSI, MACD, very similar in terms of what you're getting over here. But, you know, actually the money flow has been holding in okay. We saw kind of, like we said before, slightly higher high over here, but we matched that level over here. So in terms of money flow, that's kind of, you can say it's a positive, but it's actually not really a positive divergence. It's just in line with price action. What you wouldn't want to see is another high being made here and money flow making a lower high or even dipping lower. Then you'd have, at that point in time, well, we wouldn't have to guess. We'd have negative three different sort of indications for negative divergence. And that can be kind of something to be mindful of as well. We'll talk a little bit about this in just a second as it relates to, let's see, well, seasonality. And we'll take a look at what the chart pattern does show us here in a second. But let's go back to the SPX for now. So I just wanted to show you that it's always interesting to kind of take a look at and see how markets are responding to indicators when you are making highs, but the indicators are not. We have seen a pretty good record of indicators making highs, not from this high, but it kind of built up, build up, build up, build up, build up. RSI kind of followed in line with price, not now. We'll see what happens. Those gaps do have a lot to do with it. So that's just a consideration to keep in mind. Okay, couple quick notes. Scanning through the NDX. You can see RSI really quite low on the NDX as well, and we're really just holding into this range. Now, if we step back and think about it, if you have a consolidation, it's not too unusual, folks. It's really not. If you have a big run up, which we did have over all the way from August up to where we're at right now, if this were in fact a consolidation here, which it is, I mean, we have similar highs and similar lows. This does look like a lot of what I might teach in my class on Tuesdays, which is swing trading, where we talk a lot about flag patterns. That's sort of that longer term weekly type flag pattern. In fact, the flag pattern could be a big run up and a consolidation. If that's the case, we might get weakening numbers over here, but the flag pattern on a larger scale is actually really quite positive. It could be the way that some traders will look at these price patterns in terms of a bullish flag pattern, etc. Look at it holding. It's holding up really nicely. I mean, in terms of holding this range in here, incredibly well thus far. We actually have a bit of a shoulder, head, shoulder right there. So an inverted head and shoulder, shoulder, head, shoulder. Okay, now the projected move for that is really the high of the range through the head and shoulder. That's the inverted head and shoulder is what it is, or head and shoulder bottom. And then you take that level. Sorry, I had to take it off for just a second, but I'll draw it again. So we take this range from the shoulder, head, shoulder. Okay, we take the high end off to the low end right here. So we're taking this price range right there. Now, if we can break up above these levels right there, we're basically just looking at this projection coming up here. So I don't always get to do this in the markets, but it is kind of interesting when I can. So I'm just taking a look at this price action right there. If we can break, this is the key though, for the inverted head and shoulders pattern, also known as the head and shoulders bottom. But if we can break above that 22,000 right there, then that's the minimum retracement level for the inverted head and shoulders pattern. Now, it doesn't have to unfold, but that's a pretty interesting and kind of clear one. And this is, sometimes you'll find these on these weekly pullbacks, you know, that are in the direction of the longer term trend. You get kind of this interesting pattern. I think some people could say it's kind of like a cup and handle. Sure, it's kind of like that too. The thing for me though is if you get the middle point here and these points over here, it's a bit like a fractal formation where you're getting a low, there's your main low, and then you're getting two additional higher lows. That's a fractal, referred to as a fractal. Went to that in one of my classes, but it's a kind of a weekly type fractal. And if you get a move out here, it does kind of look to me possibly like a bull flag pattern. So we're getting close to it. We'll see if it happens, but that could be a real positive if in fact it does break and extend up to those levels. All right. Oh, let's see. Audio and video keeps going in and out. Sorry about that, Joe. It looks like another person is getting the audio stream okay. You might just want to do a potential refresh on the screen, perhaps, but see how that goes. Okay. Directors behind the scenes are letting me know that in terms of what we're broadcasting, it's going out. So it might just be a quick refresh there. But thanks for letting us know on that. Okay, still happens. Shoot. All right, might be a local issue there, Joe. Hope you can get it up soon, though. The recording should be recorded fine, though. Just as a heads up there, in case you got that. Okay. So we looked at a couple of key markets over there, folks. We talked about the ATR, the average true range, just the standard default, the Wells Wilder 1978 standard default there when he built this indicator. We talked about trying to tracking a little bit of volatility in terms of the ranges, the range of the moves in here from day-to-day movement, etc. Now, we talked about this and we said sometimes when you get a big spike up like this, right, and you can kind of look at it, sometimes, you will get a contraction coming back down. The interesting thing over here is we've kind of come up within this wider range and we've just sort of flattened out. Now, I think, one thing that has added to this volatility, well, are these gaps coming down, that DeepSeek announcement. We had some tariff announcements coming through here. We had a lot of market news and a lot of volatility in here that might be accounting for it. Still, I want you to put that in the context, though, of the possibility of this being a longer term possible price pattern trend to the upside. Let's go ahead and just flip this to a weekly so I can show you this. I'm going to zoom in on it now because that's like 10 years. That's just way too much time. But that is the weekly visual of what I just looked at right now. Now you can kind of maybe see that flag pattern setting up over here. And now you have kind of this general shorter term range that we could look at using that, that inverted head and shoulders pattern right there. If we were to take out like one of these ranges over here, it could foretell the pull, the breakthrough of the flag and the extension higher. Because we are getting confirmations in terms of off the bottom. If you're looking at, let's say for example, close above the high of the low bar. These are weekly, so I can't really say day. But that is a hold right there on a weekly chart. And now we might be getting a couple of follow-through days here. So all else equal, that could be a positive, but remains to be seen. Can we break higher or not? I did want to show you this, even though we did have higher volatility in terms of the ATR. All right. Okay, let's do this. We're going to go ahead and take a look at some of our other indicators. But before I do that, I did want to take a look at our grids, our 6-month grids here, and take a look and see what we've got over here. It was interesting. I pointed out, actually, I'm going to set this up over here on a 3-month. Oh, let's see. There's, okay, well, a 1 month. 1 month, perfect. So this is a 1 month chart, a 1 month percentage change over here. The percentage performance that you can see over a period of time. And what is interesting is look what's number one over the past 1 month. What has been the best sector performer of the group? Healthcare. We talked about healthcare and materials as potential bull flag patterns. Now, this is kind of like the image of materials over here. This is sort of materials, what it had been doing. And healthcare was like one of these. It was really kind of a long, extended one, but we kind of broke a trend line coming up here. And for healthcare, it was kind of a little bit longer possible flag pattern on a weekly chart, but that has been the best performer over this time frame. Information technology, we'll see how that inverted head and shoulders goes. Like we just looked at the NASDAQ, right? That was the only real loser. But materials, quite good. I mean, both in the 7+% range, financials and all the way down the line. But these, I think, are two really, really interesting changes over the 1 month. Sometimes traders, investors will look at a 1 month change because if those are higher numbers, they're higher percentages, it could foretell the 1 month to the 3 month to the 6 to the 12. That's how oftentimes it starts. In other words, what I wanted to highlight here for you, when you see these percentages change on a 1 month, and we're just in the Market Watch tab right now, right under quotes, and I've just gone into S&P 500 sectors is where I'm at right now. If you haven't seen this before, just wanted to let you know. All right. So what I'm looking at is, so healthcare, it had been doing this, and it started to spike. So that's about a 7.8% move. But do you see what price pattern that kind of looks like? What does that look like? Possibility of, and we don't know, it's the question, but could that be the flag pattern unfolding? Because we have this really long upward trend over here. Could it resume a longer term move? Same holds true with materials. All right. So that's one way to look at this before I go in and take a look at the charts, because you can see this on percentages, and it's just nice to be able to see what's happening, behind the scenes with the numbers. It's a way that I've been, I try to relate percentage changes to actual chart data as indications. But here are the materials right here. Over the past month, look at that. And by the way, this is a longer term trend for materials. I'm right at top here on materials. But see this pullback here? That's the breakup. And now look at how we've tightened into that range right there. These are really interesting levels to look at volatility. We have a tightening in there. Okay, so healthcare, the number one leader. Here's that long pullback. Now, if we looked at it previously, there's this long upward trend over here too. So it's kind of like a longer term flag. And then we're getting kind of this mini flag within the flag. I'm going to go ahead and stop you all from squinting. And I'm going to go ahead and just maximize the chart. A little easier to see, isn't it? There we go. So that's that longer term flag. So a long extended move over here. That's a long pullback. We had a bit of a trend line break, not a straight line, but you get the idea. We took out some highs over here, and now we're flagging here. And what are we doing right now? We're just barely breaking out. That could open up our eyes to a few areas in this area, in this group. And remember, this is all healthcare in the S&P. So these are not necessarily mid cap, very likely not small cap stocks, definitely not penny stocks. They wouldn't be on the exchange, but they are part of the S&P 500, which we can tap into, right? We can find out. Let me just do it right now. While we're at it, before I dive a little bit deeper into volatility, let me just show this to you right now, because one of the core points of my discussion today is really looking at finding these ranges and spotting them quickly. I'm actually, considering looking at a possible scan in ThinkScript to help us find these little tight ranges that occur. There are a couple of different indicators that could help us in that regard. But if I do that, I'll probably do it on Friday. That sounds of interest to you guys. But I'm in the scan tab here, and I'm going to go ahead and intersect the S&P 500 with the industry, which is healthcare. Let's just see what those companies are. 61 companies. And some of these could be flagging, and many of them might be those that are possibly right in this range. I did actually a paper trade yesterday in one of the swing trades that we did. It was on this company right there. You can just see there's more behind it than just finding a stock. Sometimes the industry is moving, right? This IDXX, for example, just to break it down one more level. IDXX, this had by itself, interestingly, we looked at it, a shoulder, head, shoulder, possible inverted head and shoulders pattern with an earnings announcement right there. Those are always kind of interesting when they take out the long extended ranges, right? Right over here. Because a cup and handle like this could foretell a move up approximately, I'm just eyeballing it, folks, close to this range over here. If it were to run, we don't know if that'll happen. But it is interesting. A lot of times you can get some force when you are getting earnings in there, maybe potentially giving it a little bit of a lift and maybe a reason to get going. I was just saying, hey, it's happening at a time when the sector, right, top-down analysis, sector industry strength could be starting to give a lift to some of these healthcare stocks that have been dragging for a little bit. That's just one right there, but that's why that was up so much. Right there. It's up, what, 12? Anyways, it's going to take a second to load. 12%, I think, this week. IDXX, yeah, it's on the top. Yeah, roughly in the 12 range. But this is a cool way to kind of do a deeper dive into reversal. Okay. Reversal, flag pattern, possibly, and just barely starting to break out of the flag pattern. Healthcare, S&P 500. Okay, cool tools, great tools on Thinkorswim to help us with this. All right, if you guys are finding this useful, effective, smash that like button. I really appreciate it. That helps. It actually helps force the YouTube algorithm to keep this content coming up more frequently for you within our channel. Encourage you to, bottom right hand corner of the screen, just smash that subscribe button. Easy as heck to do. Love to have you on board with our Trader Talks channel. I always appreciate the comments coming through. It looks like Connie has got us all caught up. Excellent. Oh, thank you, Mike. Did the same thing and others. All right. Well, with that, that's a look at we'll go back to it, some of the grids that you can see. Now, also Communication Services has held strong. It's been up for a little while, whereas some of these others, I got IDXX in there now. Let's see, I got to go back to it because I didn't save it. As long as you don't save it, you go right back to where you were. You can refresh it, and there you go. Right? Kind of interesting there. By the way, another one, Consumer Staples is interesting. See the flags? The flags. We're talking sector flags here too. Anything else you guys see interesting here? Real estate. Real estate could be of interest too. I mean, they've been down for a little bit. Maybe it's time for a little bit of, well, we'll see what happens. We still thought that the tech sector could be interesting. It's going to have to break higher. It could go sideways as well. Yes. Oh, yeah, that scan. So I haven't built that scan yet, Thea. So that is a scan I was thinking about building for the ThinkScript class on Friday. Well, let's get into that right now. Let's get into some of what I was going to be referring to, well, talking to you guys about specifically as it relates to, some of the contraction of volatility was a key point I wanted to bring up because there are some areas and some industries that are doing that. Now, I had shown you guys the ATR. That is one way to look at volatility. Another way to do that too with the ATR, there are other indicators out there such as the Bollinger Bands. Bollinger Bands will simply plot on a chart. Gets a little, there's a lot of lines. I'll just put it that way. There's a lot to look at here, but just as a quick explanation of those lines, you have the 20-period simple moving average residing right in the middle to help us with maybe some support and resistance points. 20 is always interesting. That's what that stands for right there. And you've also got these other lines too. And it's always pretty chaotic to look at, but it does give us a standard deviation. If you're familiar with statistics, a 2 standard deviation of 2. I got to put the D in there, standard deviation of 2 to the upside and the downside. Now, sometimes when you're looking at contractions that you might find in a bull market, or I should say a bull flag, or it could be a bull market, or it could be a bear market, what will happen is the standard deviation above, +2, -2, that's in our purple line, okay? That's the +2, -2 above our moving average point. They'll begin to contract and they'll begin to squeeze, and you can see a squeeze pretty clearly right there in this stock. When you get a squeeze like that, you're basically looking for a breakout one way or the other. And can you see where the breakout occurred? If you break above the highs, it might break out for a little bit, but by gosh, it dropped down pretty sharply as well. Now you can imagine if we're looking at a bull flag pattern, you get a pull up like this. What were we just looking at? Kind of the sideways range. That's where you get this contraction of the Bollinger Bands, right? They come in tighter over this range. They'll come in like this, and you're waiting for a breakout, maybe in the direction of the trend over here, which is what the bull flag does. That's what the trend does. Okay. So with that, let's go ahead, and I want to talk about one other indicator. It's going to get a little busy in here. This is the Keltner channel. The Keltner channel uses actually ATRs. This is set up as a 1.5 ATR. Still, it's got the 20-period moving average, but it plots an ATR. So an average true range, 1.5 above, 1.5 below. Okay, now we're talking busy. That, my friends, is really quite busy. But those Keltner channels are really quite fascinating. In fact, when the Keltner channel itself, and we can go ahead and take a look at anything. Let's say, for example, I'm going to pull up, I just want to look at Boeing here. Boeing's been in a bit of a tighter range. You can see the Keltner channels in the red, and then we've got the Bollinger Bands outside that. Both of these are interesting, and they give us sort of squeeze type potential. But where it really becomes quite interesting is when the Keltner channels themselves, the ATRs, are small enough that they fit within the Bollinger Band range. And I think many of you might know this. That's the TTM squeeze. It's a specific indicator in and of itself. But I wanted to throw this one out to you specifically to give you something current to look at. But look at where we're at right now. The price comes up on Boeing, comes down here, kind of holding into a range, and then all of a sudden we get that kind of unusual pattern where the Keltner channel will slip inside of the Bollinger Bands. Okay, and when that happens, it's referred to as a squeeze. It's a certain type of squeeze. It's referred to as it's the TTM squeeze. And I did get some suggestions on this that people did want to see this as a scan because it doesn't happen too often, but when it does, it is quite fascinating how it does tend to really spot those interesting areas where a price move is based on two indicators could be more likely to occur. I'm going to throw it out there right now and kind of show it to you. Now, where I wanted to point out this to you, that you get a number of different colors, as you can see in here. What we're really focused in on is when the squeeze occurs. Notice down here, these green dots. Yeah, I'm going to actually, raise it up just a little bit more. I think it actually makes them a little bit, it makes them a little bit bigger. All right, there are the green dots right here. When that occurs, the Keltner channels are outside the Bollinger Bands. So we've got one level plus one level of an indication by looking at the Keltner channels. We've got a +2 level by looking at Bollinger Bands. But really, we're trying to look at maybe a +3 level is one way that a trader could look at this. And we're saying that, I'm pointing over here, by the way, and we're saying that when this occurs, it's like, the Keltners are showing a tightening of a coil, and then also the Bollinger Bands are as well, but the Keltners are inside the Bollinger Bands. When it's green, they're outside, but when it's red, I'm just going to point this out in red right there. When it's in red, you see the dots are red? That tells us right there that the Keltner channel starts right over here, right there. Keltner channels are inside of the Bollinger Bands. And that is a squeeze. And when that occurs, oftentimes you'll get a move outside of that range. Now, sometimes I've read about this, but really 3 to 5 Keltner bars, or I should say, 3 to 5 red dots in the TTM squeeze are what you're really kind of looking for. 3 can kind of be an interesting indicator. A lot of times traders look at a 5 for a confirmation. But you can look at price action too and consider the price pattern as this is unfolding. But when you get that, and we can see over here, there's clearly 3 to 5 dots, we get plenty, but look at the move that comes outside of that range. And notice it did follow the direction of the underlying trend. It's really quite interesting. Look at us over here. Where are we at? There's Boeing. I got to give you guys something that we can look at currently too. Now, I'm going to look at some industries here in just a second, but as an example, look and see where we're at. Now, it doesn't suggest up or down. It just says there's going to be a move according to the TTM squeeze. We're way past 5 here. There's a confirmation of that. We're squeezing, we're holding within that range, and we're just staying flat. And do you see the flag pattern? Okay. Will it go in the direction of the trend? The trend right now, it appears, is up. Now, I'm going to clear these off because that is a lot to look at. And those lines, I'm telling you, I've got this theory, by the way. if you have enough lines on a chart, you can never be wrong. You're going to find support and resistance somewhere. That dawned on me one time when I had so many lines, I was finding support and resistance everywhere. You kind of have to narrow that down. And we've done just that. We took those off and we're just looking at the TTM right down here. But now, is it a little bit easier to see? Okay. There's a lot going on behind the scenes to deliver these dots, but you could see them in a little sideways channel right there, possibly a bounce. So some traders might be saying, well, gosh, have we closed above this level yet? Not yet, but maybe today? Question mark. Okay, what I wanted to do is take you in to some areas that could be of interest to you. Is it relates to specific industries? Let's start off with the first one. This is the airlines industry. Come take a look down here with me at the bottom. Whoa. Let's just clear these off for a second. We can always pull them back, but today's discussion is on that contraction of volatility and the possibility of a move coming out. Okay. Big, strong move up in airlines up top here. Look at the sideways move. We don't know which direction it could go. It could certainly go, and I think many traders would say it could go in the direction of the underlying trend. And what direction is that? Well, I have to draw the trend. If I'm drawing the word trend with the trend, I'm drawing it up because that's the direction it's going, right? It's going higher. Is this a longer term bull flag? It could be. We just had two dots show up right there. Oh, okay, there we go. Pull it back. So here we go. There are the two dots. So let me ask you guys this. What range are we going to be looking at? What range? I mean, for prices to move. If you guys were to look at this right here, let's do this. Where would we be looking at for a possible breakout? Now think about where prices we actually closed above. Let's just put it down. So maybe down here, maybe through there. That's the range. Breaks up. Maybe some traders say that's a positive. Breaks down. And some might say that might be a negative because volatility is starting to creep up. I've got two more to look at. Then we got a few more things to take a look at. It does work with sectors. Now I went through Journey and it doesn't have, I'm not showing anything listed with sectors themselves. Because remember, it's just looking at the price action, throwing on those Bollinger Bands, standard deviations, Keltner throwing on those ATRs. And when we get the Keltner trading inside that Bollinger, then you got it. All right, let me do this real quick. Let me just take a look at one thing here. I'm saying that slightly different. I'm sorry. I just said, I think I said it right earlier. Yeah, but if we break this down, in fact, I wanted to pull it up because I've got to, I slipped with the tongue on the last one there, but it's when, the Bollinger bands fit inside the Keltner channel. In other words, the standard deviations are creeping underneath. That's what we were pointing out on the chart earlier. Okay, not the other way around. So let's just pull this up real quick, and I'll highlight this for you guys. But the point is they're going within the Bollinger Bands fit inside the Keltner channel. In fact, let's pull it up right now. We can click on it here. You can always go in and take a look, but that's what it's going to tell us right there. Okay, dang it, it's going to take some time to load up again. It does this on our presentations. I don't know why, but at least I could highlight that for you if you guys ever wanted to take a look at it. We're just looking at the squeeze there. Okay, there we go. Okay, good enough. Let's go ahead and take a look back now. Make sure we got the wording on all that correctly. Yes, gentle, gentle John. Yep, that's it. So it's a squeeze nonetheless, but absolutely, it's got to be the Bollinger Bands inside the Keltner channel. I think many of you are familiar with this, but you're seeing it here. And so what I'm going to do is I'm going to show it on a couple others, and then we're going to take a look at the stocks within that group. So let's do this right now. Next one up. This is the ground transportation. So we saw air transportation. Now we're seeing ground transportation. Okay, here you go. It started to creep up. We're at 4 over here in terms of the squeeze, a little bit sideways. And we've got one more to look at. Where's it going to be in? There's more though. We could look at. There are some in healthcare too. You could take a look at. There's some companies that are in healthcare for sure that look like that flag that we're saying that we talked about previously. But computer and electronics retail, interesting. What's going on in there? Haven't looked at that one in quite some time, although I had before. Look at the longer term move. If I just look at this on a uh, weekly chart, can you see the consolidation? Oh, dang, it flipped. Hang on a second. Um, let's go ahead and just hit that. Anyways, I just lost it. Um, anyways, on the weekly chart, it was a really interesting weekly pattern in terms of head and shoulder, excuse me, a bull flag type pattern. It was there. It was showing it. You can go through and look at some of these, but it's a really easy way to scan through it. It does take a long time. If we did have a scan or it's set up in a column format, we could look at all of these. And there's a lot of different industries and sectors within here. And right now I'm just in this watch list to the right. Under the public folders, I'm right here, sectors and industries. Now let me just show you though, because we did look at airlines and we did look at the ground transportation within the S&P 500. Over here on the left-hand side, under our scan, we can simply go ahead and go right back into the S&P 500, go down to industry, and industrials is where we're going to find, there it is. Okay, so you got the ground transportation right there. And then here are your was it airline freight? Anyways, you can look over here and you can click on ground transportation. Let's click on it. Now I'm going to go ahead and click on scan. These are the companies within that group that are in a tight range. So, by the way, here are some percentage numbers. There's ODFL, Old Dominion Freight Line is what that is, ODFL. Okay, a little bit of a tight range. Now, the industry itself was in a sideways channel, which could lead us to possible flag patterns. This one just had earnings. Could this help to facilitate higher? Possibly, yes. Okay. Interesting ones in the healthcare group. Though, for sure. So I hope that was informative and useful, but it does find those contraction ranges that you might see, in stocks as they are in a bit of a sideways channel. Let me just take a look at one more over here while I got you guys. No, that was a different one we were looking at here, but you can see over here, for example, look at the extent of Kroger. This was when consumer staples, a few consumer staples companies were doing this. Right over here, really within this entire range, do you see the consolidation in the trend? Looking for a breakout to the upside. Actually broke out higher, made a higher load there, extended up. So interesting for sure. Now, we've got just a few minutes left. I still wanted to go back and tap into our regular market review as well, and just highlight a couple of key points that we've got here too. But looking over here, with the McClellan oscillator, we did dip below our 70 after we got above 100. And again, that tells us 2 to 3 weeks of a sideways range or down, right? If we're going down below those levels, which we were, 2 to 3 weeks, and we got just that. I mean, so far, we're getting that from our 70. We're still within that range. In fact, we dipped right there. Yeah, right about there. So it says 2 to 3 weeks of a sideways channel. We'll see what happens. It could still work its way up here over that 2 to 3 weeks because we're real close to getting to 2 weeks and the possibility of a breakout. We'll see what happens there. One other quick note on this page before we go forward is, two more. Actually, the McClellan Summation Index. This is for the NYSE, though. We are facing up, and that is a positive. Okay. If you put that in conjunction with what we're looking up here, just on the McClellan oscillator itself, that's a positive too in terms of a consolidation range. We'll see if that can influence us higher. I will say our advanced decline line did a great job of actually bouncing right back up into this channel over here with this most recent move, and we are holding it. So advancers versus decliners, we're really kind of holding this despite extra volatility in the market. It's really holding up actually quite well. The equal weight, kind of looks like a bit of a flag pattern possibly there too. Maybe we'll see that getting started. You know what? The K hold would be actually a close above that bar right there on an equal weighted basis for the S&P 500. So we're very close to that. About 20 minutes left in our in the market day. We'll see if that does unfold there. NASDAQ, excuse me, NYSE Composite, a much bigger basket of companies, about 2,800. You can see the breakup over here, the sideways range. And then what you could get with this is possibility of a W-type pattern down here. Okay, and a lot of times those can continue on up. They can be a continuation type pattern, but to get that continuation pattern, what we're going to have to see is really, initially a break above our consolidation range right there. Wow, that could almost be a TTM squeeze, possibly. I don't know. Okay, coming down here, looking at the Omen, in terms of the Hindenburg Omen, some of the spikes that were previously over here. Let's just see what our weekly chart shows us. We got another one. So again, why is this interesting? Why is that interesting? We're getting a spike here, a spike here, a spike here. Well, it says there were a fair number of 52-week new lows in the market versus 52-week new highs in the market. And when you get the highs and the lows, and you get quite a bit of both, it kind of creates a fracture in the market where sometimes markets can come down. The difference here is, though, is the trend is still up. Now, if the trend were to break down, the trend is a positive upward trend, like over here with all these spikes that we'd shown you many times, but that was already making lower lows and lower highs. And that's where you really need to watch out for the possibility of a trend break. So if we were to come down here and make a new low, struggle back up here, and we're getting some of these Omen spikes, that would be something you certainly could put on your radar there as well. All right. Let's see. Yeah, so no real changes yet in the NYSE new highs. Now, again, a lot of the sectors in the market had these big, long consolidations. So are they getting new annual highs with these longer term consolidations like over here? It's really, really tricky, even though we saw some of the sectors, and you guys saw this specifically, we saw them reversing higher. Industrials, consumer staples. We saw materials, real estate as well. That had been really, really depressed. We're not making, annual highs over here. And so even though if the market were to make new highs, in terms of the NYSE, the prices are going higher, it would stand to reason as to why we wouldn't be getting new highs over here. So just put that in context. And last but not least, and we'll finish it up on this, there is our seasonality chart. How does this all play a role? Well, generally in February, mid-February, there is a high. But if you exclude the coronavirus, that big impact that it had on the chart over here, generally, you'll get a run up to about mid-March-ish. It can be towards the end of March before there's some normal consolidation that you get in April over here. So we'll see if that happens. But again, if you haven't seen this chart, this is just seasonality. This just represents what the last 10 years of the S&P 500 have done on average and what we've done as of this year, 2025. Okay. Anytime anybody wants to view this, by the way, you can come up and you can find that under style, and then under your chart mode, this has just been switched to seasonality right there. You can look at it on any stock that you might want to be looking at as well. All right. Well, it has been fun to be with you and really fun to explain a lot of what we've been looking at more recently and what we could see, just generally speaking, in the markets. So I'll just go back to our overview of the markets over here, just as a quick observation. But yeah, today, I wanted to focus in on some of those industries specifically that were getting that TTM squeeze. I wanted to explain how that worked with the Bollinger Bands and the Keltner channels, and specifically that was, the Bollinger Bands fitting inside those Keltner channels, and you get those red dots down there. But that's really an indicator that you can all put on and have some really good ideas in terms of what might be on the verge of moving. What kind of got us into that area, we're looking at the charts of the sectors. We saw some of those flagging, so keep that in mind as well. Again, folks, if you like today's presentation, smash that like button. Be sure to subscribe. I look forward to future discussions with you. Have a terrific rest of the day, and thank you so much, Connie. Bye-bye.